Hello, good morning, I guess, since we started late. So I think what I'll do is I'll introduce the amazing panel that I have here today, and then we'll get started with a little introduction. So let me start with Violette. So Violette Abtahi is the COO of Enya AI and the Boba Network, and I'll have her talk a little bit about that. Fatima Hamdani. Fatima is the superstar CEO and co-founder of Kraus Hamdani Aerospace. And when she describes what they do, you'll see why she is that superstar. Angela Bermudo. Angela is the CEO of Future Horizon and one of the co-founders of Future Quest, which is a DAO focused on largely climate. And then David Johnston, who is the COO of DLTX, which is a publicly traded Norwegian company. But David is one of the OGs of the crypto space. He has been involved in the space since 2012, early investor in some of the largest projects in the space, and one of the most thoughtful people I have ever come across and had the pleasure of working with in crypto and blockchain. So welcome, David. Welcome, everyone. Thank you for being here.
Thank you.
So let's start with really quick introductions of what your companies do, just to give everyone context, and then we'll jump in. So starting with you, Violette, just quick 30 seconds.
So the company, we are a layer 2 scaling solution for blockchain technologies, working on scaling the ecosystem so that we can give access to blockchain systems and cryptocurrencies to the world. But really what I do is we're all agents of change. So here spreading love and coming together to create a better future together.
How do you top that? Sharing love, right? We build perpetual unmanned aerial platforms. So utilizing various aerial altitudes going all the way up to the stratosphere, the vision is, how do you create a connected world between sea, land, air, and space using perpetual flight? Both from an infrastructure perspective, we are the best cell towers in the sky. So when you want to create and give access to rural, from a telecommunication wireless services to actual edge-based processing for intelligence, so that you could be making better decisions for wildlife anti-poaching, disaster management, climate change monitoring, and even in the world that today we're facing war and disasters constantly, how do you manage through that so that when you're looking at climate, that doesn't get impacted as well? So perpetual flight is, in a way, an answer to that. And today we're flying persistent unmanned aerial platforms, 100% electric, that does biomimicry and is able to sit at different altitudes to do exactly that. So that's our vision and mission in life. So looking forward to this discussion. Angela.
Future Horizon is first and foremost a community of influential people from all over the world, including Amit, Fatima, and Violette, actually. And we come together to basically design solutions to be able to create a more sustainable future. Now, we asked ourselves several months ago as to whether or not we were actually creating enough impact at the scale that we need to be able to address the situation that we're currently in. And the answer was not enough. And so that is why we are launching Future Quest, which is a Web3 impact fund and accelerator that's designed to support climate solutions.
Hey, everybody. David here. Basically, DLTX is building the infrastructure layer for Web3. And what I mean by that is we basically do the physical facilities, the data centers for distributed compute, distributed storage with Filecoin, distributed bandwidth, and Bitcoin for distributed money. And so our passion is, how quickly can we get these new capabilities of Web3 to as many people in the world as possible? And so our mission is to scale that physical infrastructure. And so, as Amit mentioned, we're doing that through a public company, sort of one of the first public companies to be all Web3. And doing that here in Oslo has been a wonderfully inviting ecosystem to build in. And yeah, excited to be here.
Well, yeah, lovely to have you. It's quite convenient that you happen to be doing this with a Norwegian public company. So one of the things that we've been thinking about a lot, and certainly everyone here on stage and many of you here amongst us have explored and worked on, is the fundamental shifts and changes that we've seen coming in society and in the planet for all of us, non-geographically bound. And if you look at the last, take the last 5-7 years of our collective lives, there have been some incredible movements that we've seen come around. Black Lives Matter, started out as a racial injustice protest movement in the US and then grew to this global phenomena that went well past just racial injustice. We had the climate movement, or the climate battle, change from people in gray suits to a 16-year-old, now I think she's 19, Swedish girl. We had Wall Street Bets, which was this protest movement against the cabal-like trading models in most of the trading world. And all three of these were great protest movements. And then we had, hello Mia, and then we had Bitcoin, which is a great example of a protest movement against centralized currency, except it had its solution baked in. We have DeFi, decentralized finance, which is a protest movement against very controlled centralized finance and economics that benefit only those participants in centralized finance, with a solution baked in. And then you saw in more recent times with the evolution of the NFT space, non-fungible tokens, especially applied to art, it's been this protest movement of a disenfranchised creator and investors in those creators movement. And while they're all different in nature, they're separate vectors of the same revolution. And it's something I call the commons revolution or the people's revolution. And the reality is that whether you're building, whether you're investing, whether you're influencing, we're all now building, investing, influencing for this commons revolution. And so if you're building for centralized command and control, you aren't seeing the sociocultural tea leaves. You aren't reading zeitgeist. And a lot of these things that we hear and talk about are trends. And it's very cool. And these trends will end up becoming either categories by themselves, and we'll see category leaders. But these trends get birth from something bigger. And that something bigger is zeitgeist. And seeing that zeitgeist and reading those tea leaves early allows us to build, invest, and also influence where the next decade of opportunity and responsibility lies. And we've talked about this before, and I wanted to mention this again for those of you who haven't been part of some of our conversations. But what's really important now is thinking about how we deliver on that commons revolution. What does it need? And so there's about like 3 or 4 fundamental areas of the commons revolution that we all need to build for and invest in. The infrastructure, the funding and capital, and then I think underneath all of that, the philosophy, the why we do this and the who we do this for. Because if you're doing the commons revolution, for Wall Street, or if you're doing it for a big centralized company, then you're doing it for the wrong people and most likely the wrong reasons. So I want to start with understanding, and I'll start with you, David,
Sure.
because you've been involved in this space for a long time. And you have very strong philosophical underpinnings for why decentralization.
Right.
Can you give us a 2-minute explanation behind the why from your perspective?
Sure. And I was having a great conversation with Robert Smith about just exactly this topic before we started, which was, okay, if these words have meaning, then we have to assign real principles behind them. So when I wrote the paper on decentralized applications in 2013, I said, let's define that as peer-to-peer, right, which is open access and participation for everyone. It has to be open source, so it's not controlled by a company or a patent. It has to have a blockchain backend, so you can build a community, it can be persistent, and it has to have a token, because that's really how the software in the community pay for the infrastructure and the hardware that they need. That's, in my opinion, the 4 principles that have really built Web3 and blockchain. Is you have to have all of those 4 things. I can't really imagine a community or blockchain without one of those 4 tenets, that isn't open source, that doesn't have a community with a blockchain, that doesn't have an incentive mechanism. You're missing one of those pieces. And so philosophically, for me, the thing that's exciting about that, and that's what I was talking about with Robert, is that's what opens this up to billions of people. Because the secret that nobody wants to talk about in the room is that the unbanked are unbanked by law. You're not allowed to bank them. I'm sorry, you don't have a permanent address. You don't qualify to access the financial system today. That is unacceptable, right? And so you're never going to reform these centralized systems from the inside. We've had to create this alternative where it's permissionless, where it's open to everybody, where there is no central party controlling the system. That to me is the fundamental philosophical underpinning to this whole new system, is removing those central parties and creating where somebody can hold their own wealth, they can access these systems, and they don't need permission to do so. So that's at the core for me.
And I love that, and that's been kind of foundational to what you've invested in, what you've built alongside. I'm going to jump to you, Fatima, because there's this deep connection with the unbanked, because then you also come to aspects of they're unbanked for legal reasons, but they're also unbanked for infrastructure reasons.
Exactly, and I'll actually comment a little bit on the unbanked, so to speak. And a refugee spends average 17 and a half years in a refugee camp.
Wow.
They don't have an identity. They don't have a location. So when you're talking about ensuring that they have access to the same kind of resources that all of us do, when we are trying to create equality, how are we going to be ensuring they have access? Underbanked is that mother and that daughter that's tending to the cacao fields, right? And is creating cacao for us that's coming from Guatemala. Yes, there's a lot of smaller resources that have, and I come from a digital transformation in finance, right? FinTech world. So I knew inside out what access and underbanked meant and why you're not transactable. My initial idea when we started working with unmanned platform, like, can I create a bank in space that gives access? You know, obviously when you start dreaming that way, you then come to what is needed. So 3.8 billion human beings in the world don't have any access. No wireless service, no data, nothing. They don't exist for us, but they exist. So when you are able to create a platform that can fly perpetually and is one of the best cell towers in the sky, last mile uplink, backhaul of data, suddenly makes them pop up and give them access. A lot of times we all sit with big, hairy, audacious problems. I don't care if this doesn't fully get solved while I'm still alive, but if we can put the foundation to give access to the entire planet, and let's bring them up where we are and give them the same kind of infrastructure availability that we have so that they can dream as well. That's when this becomes fun. And you know what's interesting, David? You said 4 tenets. Those 4 tenets apply to everything. Today, when we are building the platform that Airbus, that even Elon said cannot be done, and we're flying it today, was based on open source, open architecture, small operational footprint, 100% electric, and biomimicry. So it just kind of brings in what you said in a very different world to the world of hard tech and AI at edge, right?
Once we add the token model that we have to talk about, you've completed the quadfecta or what have you. Violette, I'll jump over to you because you have very strong philosophical reasons for doing what you do and being in this space. So
absolutely. I'm going to just go a little bit back, just like you guys did. So I was looking at some statistics, and 2 that really stand out every single time that you look at is that 1/3 of the world's adult population doesn't have access to banking, which means they can't trade, they cannot participate in the global economy. They are pretty much isolated. And like Fatima said, they do not exist, quote unquote, for the rest of the world. And to top that up, 50% of the world's population today is living with under $2 per day. Those of us who are here and are so fortunate and live in a bubble in some ways can understand how difficult that can be. So looking at what we have economically from an infrastructure perspective, when we look at it, we have been dealing with a 15th century printing press technology, which no longer serves us in 21st century. So fast forward, in the past 50 years, what we have created is we went from 50 years ago, 4 computers and 8 web pages connected, to today 40 billion computers and 8 billion web pages on a universal protocol connected to each other. Now today we have an underlying transaction system named Bitcoin or cryptocurrency that allows us to peer-to-peer communicate with one another. So to wrap that up, this is a socioeconomic evolution or revolution on so many different levels, because for the first time in the human history, we're allowing everyone, no matter where they are, irrespective of space-time limitations, to participate in the global economy, to trade peer-to-peer, permissionless, trustless, and be able to create these microeconomies that can finally take the human race from years and years of just struggling to survive to get over that hump of survival and actually thrive, so that we can build, we can create, we can innovate, we can love because we're not hungry and we're not thirsty and we're not struggling with our basic needs. So that's what makes me wake up every single day with so much energy and just go through the day and think that we can do this together. For the first time in the history, we have all the technological underlying solutions that we need to make this happen with people who are here and all of you in the audience. And this philosophically and practically and technologically makes me excited to want to keep going.
All right.
Amazing. Now, there's the practical side to that, right? Which is the infrastructure has to be built out. You know, we touched upon that initially, Fatima, with, you know, oftentimes in the world of decentralization and blockchain, when we talk about infrastructure, we right off talk about layer 1 blockchain. We talk about Ethereum, we talk about Solana, Cardano, take your pick. But there's that layer before that, right? Like if you don't have digital identity on a device, it doesn't matter how sexy, fast, wonderful, rich your blockchain is, right? You're not going to get access to it. And you're deeply focused on the idea of how do we get access to communities, regions that have no connectivity at all.
Exactly.
Right?
And then educating them. Because one of the other aspects is once you give them access, you have to ensure and enable what we were talking about, Maslow's hierarchy. If they're just worried about food, when we talk about actually, and we've not brought this up, human consciousness, we're all kind of coming together, and a lot of the work we're doing, raising that human consciousness, we need to ensure that they have the tools and they're being educated. That's how we create abundance as a goal.
Yeah.
Right? I mean, that is what we're all talking about. If we come from a place of abundance versus scarcity, so access is one first step, and then how do you get them the data that they need, or the tools and the tool sets they need to actually come in and understand and know why they want to do that as well. So I think that is another connection point of data and backhaul of data.
Right. And I want to come back to, so there's a lot of people in the audience who are involved in finance and regenerative finance and thinking about how capital can be both raised and deployed in ways that have not worked in the world of traditional finance. And I want to spend some time talking about the new financing vehicles. Before we do that, you know, one of the areas where, to tie into what you're saying, you know, we're working on an initiative called DIME, that Fatima and her company is involved in, digital inclusivity, monetization, and empowerment. And it's basically a consortium of companies that have different capabilities, access and communication being one of them, education being another. With Rainfall, where we're providing the ability for people to be able to, once they have infrastructure, you give them devices, you give them connectivity, you now have the ability to help them monetize their own data for themselves with digital identity, self-sovereign, meaning it's controlled by them, not controlled by a Facebook or a Google or one of the large big tech providers, and access regardless of where they might be. It suddenly opens out their ability to not just monetize for themselves, but to be truly empowered, because then you can deliver education content, then you can deliver other skill sets that allow them to earn even more. They can take singing lessons on these devices online, and you start to change their trajectory. We had one of our partners in the Dime initiative. It's a company called Tingo. It's an African fintech company that's very large, working with millions of farmers in Nigeria to allow them to sell direct to consumer by giving them devices that are connected and preloaded with their direct to consumer software. And what they want to do is they want to help take that model to communities around the world, where you can give refugees, where you can give other disconnected or disenfranchised communities mobile devices, and then allow them to build on top of that. And that doesn't come without access. That doesn't come without infrastructure that you all are building on top of Ethereum, for example, with the Boba network. And so at one point, we should come back and talk a little bit about the tooling and the tools that are available for those who are looking to create decentralized tokenized funds that we'll talk about now. So I'm going to start with you, Angela. You and Matt at Future Horizon have been very focused on creating a fairly first of its kind investment or pooled capital DAO, decentralized autonomous organization, to be able to collect capital from community that you've been building in the first place, to not only be able to invest in the kind of projects that the community wants to invest in the theses of the planet largely, but also get the community to participate in the outcomes and the life cycle of the project.
Exactly.
Talk to us a little bit about that, because I think it's a really unique new way to think about how we pool capital and deploy it into projects that truly matter.
Absolutely. So I think the place that we first have to start off with is the problem. There currently is not a validated way to transparently distribute or pool funds that exist when you think about impact projects and climate solutions. So what we're doing at Future Quest, which is this new Web3 impact fund that we're launching, is something that hasn't been done before, but we believe is something that can actually produce the outcome that we're looking for. So in terms of where the capital is coming from, we're looking at institutional investors. So that is coming from the community that we continue to build, as well as those who join in later on. But also looking to foundations and grant-making institutions, which have largely been culminating, accumulating these funds, but unfortunately are having difficulty actually getting them to the projects. And then once they actually get to the projects, you lack the engagement to ensure the success of these initiatives. And so what we're creating is basically an evergreen self-perpetuating fund, where the returns that you get, because we're investing in nonprofit and for-profit, the returns from the for-profit go back into the treasury, so it continues to grow. Now, on the participation side, it's important to note that when you think about what's going on with the planet and the climate and society, it's not that people don't want to participate, it's that they don't know how and what they can do. So with Future Quest, what we're doing, or what we're creating, is basically a play-to-earn ecosystem that enables anybody to contribute by taking on things like tasks, projects, etc., that are basically labeled as bounties. And you are actually able to earn on your contribution. So actually, Fatima, when you're talking about Maslow's hierarchy of needs, I love this. You often have to see how people are able to participate in climate action. And oftentimes, many people can't. We're all very privileged here, because I'm assuming that we're all financially sound, and so we're able to give our time. Now, if you actually create a mechanism that rewards people for participating, you're therefore expanding and scaling out to others to be able to have them participate. So that's what we're looking to create with Future Quest.
So let's use that as, because I think this has been a conversation I've had with many of you around kind of structure of what vehicles like this would look like, especially from an impact perspective. So maybe we can unpack that a bit.
Sure.
And David, I want to tap into you from a regulatory standpoint as well, right? So you can do this in non-fund structures. So you don't need to be a regulated fund in, take your pick of jurisdiction, right? For the US, it's typically Cayman, in Europe, probably Liechtenstein, right? So you don't need to be a regulated fund entity to be able to issue tokens to community to pool capital into what is now not your traditional AUM, but your treasury. And you can be as autonomous as you want, as you aspire to be, to actually smart contract the deployment of that capital into the wallets of the projects that are going to receive that deployment. But you can have, like when you said, institutional investors, you can have those tokens act as securities in certain markets, right? So in the US, that would be a Reg D exemption, so that you can have an accredited qualified KINS investor in the US buy into what would be the equivalent of LP units in these tokens, or they can buy a SAFT, a simple agreement for future tokens. But then you can have the tokens also have a utility function, right? So you could have members who are willing to go after quests, in your example, actually earn tokens for things that they do, either for the DAO, the pooled capital DAO, or for the projects within that, right? Structurally, is that all ready to go now? Like, can this be done in like anyone who wants Robert's plan for his fund?
Well, it all depends on the audience. I love that you're using sort of play to earn as a mechanism to effectively reach as many people as possible. It's like you're saying, they need to get value out of the system, right? And by paying them for those contributions, all of a sudden they can access and change. And then on the opposite end of the spectrum, like you're saying, is you have institutions, maybe they're by regulation or by their LP agreement, they can only invest in a security. And so by setting up a public company in Norway with the LTX, we're trying to let the legacy capital folks access this industry in a format that they can, right? Taking capital from traditional markets, putting it into a public company, and then distributing that capital into building more Web3 infrastructure, right? So we need both, right? We need as many new people onboarded into these permissionless systems, and then we need to pull capital out of the traditional markets and into these new formats using public companies has ended up being one of the great ways to do that, right? I like to joke that blockchain has largely been North American entrepreneurs housed in friendly European jurisdictions, funded by Asian capital to solve problems in India, South Africa, and America, or South America, right? So like that's the global cycle that is this new industry. So, but the technology's all there. It's now just a matter of applying it and getting it in people's hands.
Yeah, and I think extending it to traditional. So we chose not to go the Sandhill route. Not do the
chain.
and for Kraus Hamdani Aerospace. And it's interesting, we're very hard tech software. We're not in the typical sense what you would look at the blockchain. Yes, decentralization of data, and I don't use the word decentralization the same way as you do. It's about how do we get access and distribute data in a way. But we need capital too, right? And we don't look like a traditional crypto or traditional blockchain company, but that capital, we are shaking up the Boeings of the world. We are shaking up the Lockheed Martins of the world. So when you talk about commons, I don't look like the entrepreneur that Sandhill Road is used to. So then giving that access to the entrepreneurs who are minority and bringing them in, even with traditional businesses, how do you then plug all of this in is a very, very interesting conversation that we all are starting to have now more seriously, right?
And that's the best part of some of these new tokenized structures of pooling capital, where the community gets to participate in who they invest in. Guess what? The community invests in in what they believe in and who they resonate in, not what Sandhill cares about, right? And we use Sandhill loosely because who cares anymore, right?
Yeah.
Like there's this big shift that's starting to come.
Also,
Dave,
the
sorry,
voting
Violet, go ahead.
mechanism as well, right? That is something that I would like to touch on, because no matter what we create and what we build, if it's not used and there's no participation, it means nothing. It's absolutely dead. So participation is liquidity. And with decentralization, the three aspects of pillars that we're touching on is play to earn, engage to earn, and learn to earn. So if you're learning, you're actually getting rewarded for participating and for learning how to build a better future. And that's huge. So when we look at capital and we look at the traditional investment vehicles, when you come in and you focus concentrated, you can come in and bring in 20% of the company, you can take that. You have a huge vote as to where the direction of this data or this company is going to go. Versus when we are fundraising in a decentralized manner, funds and money is a vote. It's like whether I put a penny into this or I put thousands of dollars or $1 million, I have a vote to come in and vote on a governance proposal that's going to go out. So we decentralize autonomous organizations that are on the rise today. When we raise capital from the commons, we are able to actually change the future on a much larger scale, because every step that we want to take, we have to make sure that everybody agrees, or the majority of the community is agreeing with what we want to do and where we want to go. And what I love about what you said, David, is the fact that we can actually take the traditional funds today as investors and we can transform them into tokens and into funds that embed smart contracts that can then execute on behalf of the majority of the population versus a small, like 2% or 1% or 0.001% of the population. And that is incredibly powerful today.
I love that. It's users owning the commons.
Absolutely.
For once.
Yes,
Yeah.
yes.
Exactly.
And building together.
And something to just double tap on that is that it's not just capital that makes the decisions, right? Like when we're talking about governance, you can also incorporate reputation scoring. So in terms of your contribution, you can be given a certain amount of governance tokens, because you can have those two types of tokens, and therefore be able to contribute to have a say. So I think that's like such a powerful thing that we also need to have in conversation, that we're not just taking the existing antiquated system and moving it over to Web3, we're actually recreating how the whole thing works.
Absolutely. And I think the other part to that, to your point, and Violette, what you said as well, is that it's not just that there's a sliver of early investors who kind of control the voting block or the outcome of these companies, and that changes, but it tends to be a static voting block.
Absolutely.
Right?
Yes.
So like, even if you buy tokens initially and then you don't care and you don't participate, but you have all of the votes because you have most of the tokens, it takes away from, the dynamic governance. It's kind of the problem with democracy, right?
Yes.
Like it's like I vote for someone and then for 5 years they do what they want and then I don't vote for them 5 years later. That doesn't make sense,
It's a
right?
slow mechanism.
It's exactly, and so it makes a lot of sense. Well, we have 5 minutes left. We can do one of two things. If there are questions, we can address them, and if there aren't, then we can take a couple more examples of these hybrid DAO-like structures. So I'm going to first give the option to you, Matej.
Sure. I'm kind of curious, to what extent is centralization inevitable? So maybe the slightly critical and you might think naive or cliche view would be that the big players, Coinbase or whoever, I mean, they hold some crypto wallets, but all of those transactions ultimately now are just transactions on a SQL database somewhere, the same as right now. So how do you stop centralization happening?
I'll take that. So that's a great question. How can we keep these systems decentralized is maybe another way to say it. And it has a lot to do with the community, right? If people really want crypto, they hold their own keys, right? There's the not your keys, not your coins. And every time a centralized entity fails, people get reminded, oh yeah, if I don't hold the keys, they're not really my coins, right? And each time we see that happen, I got involved in 2012 none of the exchanges I used in 2012 still exist. Mt. Gox collapsed, BitInstant is gone. So I learned the lesson very early on, not your keys, not your coins. And so it's a shift in mentality, but there are a lot of good tools. The most popular blockchain wallet in the world is blockchain.com. And it's self-custody. And 100 million people almost on their system now hold their own keys. There's Exodus. There's a lot of good self-custody wallet that empower people to do that. And I think it's just a question of every cycle people learning that lesson. And as long as there's a real benefit that people get by having control over that, and they don't fall victim to convenience, like you're saying, centralizing for convenience purposes, that as long as that's an option, people that learn that lesson will choose to hold their own coins, or at least that's what I've seen in my experience.
Yeah, and that's perfect. I mean, I would add that if you look at the growth rates now, that first phase, it was all coin-based, right? Certainly from a US perspective. And you look at the growth rates of wallet adoption now, Coinbase isn't the one that's blazing ahead, right? It's your decentralized self-custody wallets. And so we're starting to see that. I think it's a very nascent industry, even though there's so much conversation about it because of the price of Bitcoin. But we're babies, compared to past tech evolutions and revolutions, and it's, ignore the prices this morning and what happened with Terra and Luna yesterday or last week, and just think about the next decade, which is how we plan. It's all going in a linear way in the right direction. Adoption, technology, infrastructure, even capital structures. Back that.
Can I actually quickly just add one thing to that? That's a wonderful question. And to add to what David and Amit said, there are two aspects that we are all consistently thinking about, and I would like to encourage everybody here to also think about it more. And the two pillars that we need more to work on more in the decentralized systems is education and culture. This is a cultural revolution. This is not just technological. Blockchain is a tool. Artificial intelligence is a tool. These are enabling tools that allow us to do what we weren't able to do before. So technologies come and act as a nervous system so that we can have large-scale planetary management systems connect without middlemen and without gatekeepers. That's what that is. But what we need to work on today is to reprogram our wiring and understand that this is a whole new culture. We need to be educated and we need to learn about it. We need to talk about it with one another. So that question brings me to want to encourage that more and more. And that's one thing that more than when we talk about the infrastructure, we need to talk about the culture, the education, what it is, what happens. So I'm really happy that you touched on that. And that's an important point.
I think that is what the fundamental infrastructure piece comes in as well. And unless that's why education is so important, unless they understand they hold their own destiny, they're not going to participate.
Absolutely.
Exactly. Right. And I'm just going to slip in there, Violette, and say that...
We'll make sure we get your question.
Sorry. Culturally, actually, this isn't a new culture. This is having a community-led system is actually something that has existed back in the day. And so what we're actually doing is going back to those roots and moving away from this sort of system that we created in modern times.
Well, we're giving them the infrastructure and the tooling that wasn't there for these communities at the time, but we're going back to that,
culturally.
Right?
It's kind of a similar question, and you kind of answered a little bit of it in terms of talking about decentralizing the platforms and the technology. How do you decentralize the community? Because 1% of Bitcoin owners own 60% of Bitcoin. There's 50 miners that mine half of the Bitcoin. So how is that really different from a Wall Street structure that we always complain about, which is that the 1% own everything? So how do you actually
That is a wonderful question.
break that down? Because I just feel like we're replacing one system with another, and if the whole point of this is decentralization, why aren't we allowing a much larger community into this technology?
That is a wonderful question.
Well, I think that's why there's been so much innovation around how you earn the tokens, right? Bitcoin, the first was proof of work, spin a computer, add a lot of electricity, and over time that became centralized, right? In a few major players. But now we're seeing the revolution with play to earn and other options where it's like, no, don't worry about having a computer and adding electricity. There's an ability for everyone to perform this task and get rewarded for that. But you needed effectively all the pieces before that, right? You needed decentralized money, you needed the smart contracts, you needed the oracles, you needed each of these pieces to now get to systems that are more and more distributed. So people have talked recently about fair launch. What is a fair launch that isn't controlled by some small group? And we're trying to get towards that ideal, is how I'd put it.
Also, on the infrastructure side, I would say that's a question that we constantly bring up among ourselves, right? Like, this is more centralized than the traditional centralized world. So this is a little bit hypocritical. But one of the main reasons, everyone is looking at it from their own perspective of what they're building, but one of the reasons is the lack of infrastructure in Web3. So the lack of block space on blockchain is something that makes it very expensive, it makes it scarce, and therefore you need to have a certain amount of funds to be able to participate in this space, right? So if you're someone in a remote place in the world and what you have is $1 in your pocket, you're not going to be able to get on Ethereum or Bitcoin and start basically participating in these DeFi protocols or yield farming, because that's not enough money for you. So what we're working on today is scaling the infrastructure in a way that gas fees go down, speed goes up, we have more block space, there's less congestion, and then we're going to get to a point. The idea is, ideally, if we can get to a point where 1 billion users on the planet can access blockchain, can access cryptocurrency, infrastructure-wise, we are ready to scale to the rest of the planet. So the goal as an ecosystem is to get to that 1 billion user point, and once we get there, it's going to be much cheaper, it's going to be much faster, it's going to be enabling. We can create a lot more dApps, decentralized applications, and DeFi protocols, which is just one aspect of blockchain that will allow a lot of users from multiple sides of the world to come in and participate, and liquidity will increase. So that is really on many different levels an infrastructure question.
And as ambitious as that aim is, the more current aim is to get off stage. So, so we could hear you all go on for a long time because you're all amazing. Thank you very much for taking the time. I would say this, we are now at a stage where Buckminster Fuller's quote of we are all called to be architects of the future, not its victims, is so true, because people want more participation, and just treat what happened with the early stages of Bitcoin as your reference implementation that have allowed us to have this conversation so we can build for the next billion. So thank you very much, Violette, Fatima, Angela, David. Thank you very much.